The Bluefield Solar Income Fund is focused on acquiring and managing UK-based solar projects to generate renewable energy for periods of typically 25 years or longer. It's just produced an interim statement showing record earnings for the 6 months ended December 2019. I should say at this point, I have an interest in the fund myself. Neil Wood is the Finance Director for the Investment Advisor to the Bluefield Income Fund, and he joins us now. Neil, welcome.
Hi, Jeremy.
You're the right person to have in the hot seat today because you've just produced this income statement. What do you think we should know about the bullet points to indicate what it is you're doing and the sort of returns that investors are seeing out of this?
Sure. Well, I think the principal highlight is the fund has once again delivered record earnings. The half-year statement shows that earnings have been once again strong, and they're underpinned by a very stable, high-performing operating portfolio. So at IPO, the premise of the fund was to deliver long-term stable growth in income to investors. And 6 years on, once again, we've released a half-year statement which is continuing to deliver that promise.
Yeah, I said at the top that you are in this sort of period of typically 25 years. I know that much of your portfolio has attracted, because you were in it early, a government subsidy. So any people investing in this fund get benefit from that, don't they? But that subsidy no longer exists, does it?
The current subsidy regimes are, or rather, the government isn't providing any support for new build solar, but the existing portfolios that were built out during the period of 2012 to 2017, they all continue to benefit from subsidies. And Bluefield Solar Income Fund's portfolio is the beneficiary of around 60% of its revenues being backed by government support mechanisms.
So where do you go from here then when you're acquiring for growth? Let's ask first of all what the strategy is for growth, because I think that's an important place to start. We know what the figures are at the moment. You said about the record numbers, and you're yielding, I think, something just shy of 6% at current prices on the dividend side of things. But what is the plan from this point on to grow the fund to attract more potential?
Sure. Well, there are two opportunities available to the fund. The first is to continue to look to acquire operational secondary assets. So those would be current operating plants which have the benefit of government-backed subsidies. And then the second opportunity is for the fund to look to grow using unsubsidised acquisitions. So that's the next wave of solar renewable build-out, where plants will not benefit from government-backed subsidies, and they'll be supported by power prices and effectively selling power into the open market. And one of the redeeming features for a fund like Bluefield is that because it has such a highly regulated revenue base through its current existing portfolio, it offers a brilliant platform to look to acquire assets that are unsubsidised in a careful manner in the way that we have built out the current portfolio.
And of course, this fits neatly into what we're hearing a lot about global warming and so forth, and the renewable market, which is doing so well. I think it's a good idea, if we can, just to take a look at the price of the Bluefield Solar Income Fund. We have this it indicates daily movement going all the way back to the fund's inception in 2013, or just actually going back. This goes back to 2018. I think you IPO'd in 2013,
Correct.
didn't you?
Yes.
Just shy of £1. 134.25 is where we are. Explain what's been going on recently, because I'm most interested in this drop that we've seen here. But what are you telling investors at these sort of levels?
Sure. So I think what the chart is showing that over the last 6 years since the company IPO'd, there's been a consistent demand for sustainable income related products, and the market has understood that something like Bluefield Income Fund offers a fantastic base of non-correlated income against sort of more traditional income generating sources. So the drop that we can see on the right-hand side of the graph there is that relates to some analysis that was put out very recently around long-term power price forecasts, and the one scenario predicting that they could continue to fall in the long to medium term. One of the attributes of Bluefield Solar Income Fund is that its revenue base is 60% supported by government-backed tariffs, so its exposure to power prices is significantly less than other assets within the sector. And all of the forecasters, the traditional forecasters, are predicting that power will be stable and gradually rising in the near term, with a slight fall in the long term. So the share price drop that you've seen there was an overreaction to one potential scenario for future energy prices, of which we don't believe is appropriate.
Yes, of course. you don't have any control over the share price, obviously, but I think it's an interesting point to mention as to how you see things developing for the company and how you can continue to support an ever-increasing share price based on that analysis and based on the growth idea. Let's talk about the growth idea, because you mentioned that before we entered into this business about the share price. I'm interested in your growth potential here. Are you out to acquire assets that retain that government sponsorship, if you like? Presumably they're becoming far and few between, aren't they? Because more and more companies want to be holding on to that sort of asset.
Sure. So the opportunities, as we were talking about for growth of the company, are absolutely to continue to acquire operational assets which have the benefit of government-backed subsidies. I think the exciting thing for Bluefield Solar Income Fund is the nature of its capital structure enables it to acquire assets that don't have government-backed subsidies, so to continue to be part of the energy revolution in the UK. And to support the build-out of unsubsidised renewable electricity, especially on the solar side.
If you were to acquire assets that still had that government subsidy available, does that subsidy, is it transferable? Will you acquire that if you can buy a fund like that? That is potentially possible.
Sure. So the tariffs are attached to the solar farms themselves. So as soon as the solar farm transfers ownership, the tariff stays with the solar farm. So buying operational plants would enable Bluefield Solar Income Fund to continue to benefit from any government subsidy that those plants were achieving and receiving.
What about the cost involved in doing that? Are you looking at a large cost, and if so, how would you pay for it? That's a big question for investors whenever you're looking at a balance sheet, to see what cash is there and what is available, or how you would acquire the cash in order to make the transactions that you think will grow the company.
Sure. So the secondary market in the UK has seen significant increases in prices for operational assets, and the fund has operated a very restrained capital deployment approach. We're very selective in the opportunities that we assess and push forward to acquisition. They need to be not only NAV accretive, but they also need to be dividend accretive as well. So in terms of us assessing and looking to acquire projects, we would be doing it on a very restrained basis, and opportunities for funding those projects would likely be through use of potentially short-term leverage through a revolving credit facility, and very likely in the future substituting that with an equity raise to increase the shareholder capital base.
Talking about the shares again, what has been the cumulative return since IPO back in 2013, to give us some sort of perspective?
So the fund has performed extremely well in the 6 years that it's been listed. Total shareholder return is around 83%, and that's inclusive of share price growth and dividends paid back. And of course, the reason that number is so high is because the fund has experienced significant share price growth over the period, but it's also been the leading dividend payer in the sector. So it has the highest dividend of all the renewables funds currently listed on the stock exchange.
Here we are today talking about the interims. How's the second half started?
It's been fine. The first half of the year was very productive. One of the things that's most important for a fund like Bluefield Solar Income Fund is that its asset base is operating very effectively and efficiently, and the portfolio has performed well in the first half of the year and continues to perform well currently.
Yeah, and where are we going to be in a year's time? What's the hope for developments over the next 12 months?
Well, I would very much hope that we're sitting here in 6 months' time telling you once again that we've achieved a fully covered sector-leading dividend. The dividend target is 7.9 pence per share. And I would also hope to be updating you on some acquisitions we've made, most likely in the unsubsidised space. So looking at the opportunities we've taken advantage of to grow the business. Yeah,
well, we wish you luck, and we look forward to speaking to you on the full year, and indeed, of course, in 12 months' time as well, with the next set of entrants. But Neil, in the meantime, thank you much for joining us. That's Neil Wood. He's the Finance Director for the Investment Advisor to the Bluefield Income Fund.